All right, welcome to Talking Investing. I am Tom, and as always, this is not financial advice. Today, I want to talk about the market in general. I'm going to talk about the bear market. I'm going to talk about what's going on with the small caps, the large caps, and give you my overall thoughts. I really did a deep dive all weekend long, so I got a bunch to talk about. So if you're new to the channel, please remember to subscribe and hit the notification bell. Also, if everybody would please smash the like button, it helps the channel out a lot. I really appreciate it. And you will see a link in our pinned comment below to our free Discord. So you're welcome to come on over there. We got some things we're going to announce this week in the Discord, some upgrades and that kind of stuff. So hope to see you there. All right, let's talk about the market. So we are in a bear market. Thank you, Captain Obvious. I would like to welcome all the institutional money and big money to the bear market that the retail investors have been in for the last 6 months. So if you look at the data, you'll see most of the stocks that traded by retail investors have been in a downward cycle for anywhere from 6 to 10 months. The market peaked in November and it's been heading down ever since. And something just happened over the last 2 months that has now made the world wake up and recognize to what we've all already known. And I'm sure many of you out there have portfolios that are down or way down. I know some of mine are way down, and the vast majority of my small cap high growth stocks are down between 70 and 95%. 20% is a bear market. When most of the stocks on your list are down more than 70%, that's a bear market on another level. And that's what we've been dealing with really since November. So, it's just been beat down after beat down. There's stocks that, you put it on your watch list, you wait till it pulled back 50%, you buy in and find out it's pulled back another 50%, and then another 50% after that. So that's what we've all been living with for quite some time now. And I do think, honestly, even though Friday signaled the technical bear market on the S&P 500, if you use the 20% rule, I actually think that we are due, in fact, way overdue for a rally. I'm going to give you a few statistics to tell you why I think that. As you guys may know, this was the 8th straight week in a row that the Dow was down on the week. I typically don't use the Dow. It's only 30 stocks, but it is the oldest measure of the market. And the last time this happened was almost 100 years ago. It was 1923. That's 99 years ago. The S&P 500 is not far behind it. We've had a 7-week losing streak in the S&P 500. We've had a 7-week losing streak in the NASDAQ. Bitcoin has had an 8-week losing streak. That's the first 8-week losing streak Bitcoin has ever had in its history. And Ethereum is on a 7-week losing streak. So, even in the worst of bear markets, there are relief rallies. I don't think anybody's too optimistic right now that we're going to race out of this and all of a sudden jump into a bull market. So what I really want to express is that there's always opportunities. Almost every index is in one of the longest losing streaks it's had in 100 years. So at some point there will be some relief, even if it is only temporary. So I'm looking for opportunities inside of that. I am mostly a long-term investor. So most of the stocks I'm looking at are 6 to 10 months into a bear market. So I'm really reanalyzing which among those are a good opportunity to start dollar cost averaging in. And obviously I've been dollar cost averaging into many stocks already. But I encourage everybody, if you don't have a watch list or watch lists, take some time and look at the stocks the stocks you like, the things you understand, and make some watch lists. That is step one in investing. So making a watch list, understanding the stock, and then doing a little deeper dive on stocks so that you really know the fundamentals, and then you can make a buying decision. And there's so many stocks right now that are at prices that really I think nobody ever thought they would see ever again. Let's go to the chart. This is the S&P 500. So basically you can see from the peak in January 3rd, so that was really the first trading day of 2022. From there until Friday's low, the S&P 500 was down 21.5%. That takes us back to where we were last March of 2021. So that's over a year ago. So we have erased the last entire year of profits. And really, you're going to see the vast majority of this. What I really wanted to show you guys is that this has been an April and May thing. April and May have been an absolute nightmare. And there's your, 7 and 8 week losing streak that everything is on. This has been a vicious downturn. What has happened is they've come after some of the big stocks. So they've been beating up the smaller cap stocks, the high growth stocks, and one by one they've been picking off some of the large cap stocks and extra large cap stocks. But in April and May, they started to take them all out. And I will tell you, there's two exceptions to that. So if you're looking at the market overall, the energy stocks, specifically the oil and gas stocks, are doing phenomenal. Most of those are at or near their recent highs or all-time highs. So you've got a bear market situation where you've got an entire sector inside of there that's, at all-time highs. So that just goes to show how much the rest of the market is oversold. In addition to that, healthcare and pharmaceuticals are all way up on the year. So they are not at their highs. They're off of their highs, but they're way up on the year. And you'll see most of the rest of the stocks in the stock market are somewhere near their 52-week low. So there's very little place left to hide in the market. However, like I said, what I'm looking for right now is some potential relief rallies. In this video, I just want to go through and look at the big picture, and I'm going to show you what's happened and why this is all set up for the rally. Okay, so here's the NASDAQ, and the NASDAQ is typically more volatile. This is very tech heavy. So the NASDAQ from its high in November to its low was down 31.5%. I'm just going to very quickly go through a few stocks, and I want to show you what's happened, because this is why we are now in a bear market, and this is why all of a sudden the rest of the world has kind of caught up with what we've known for a long time. And it's really about 8 or 10 stocks that have changed the whole picture. I just want to quickly go through the FAANG stocks. Really, those are still extremely relevant, other than now Netflix is starting to become not very relevant because their market cap is down so substantially that a lot of people have put Nvidia as the N in FAANG in place of Netflix. However, their market cap just got beat up, but they are much, much bigger than Netflix now, whereas the reverse was true a year or two ago. Those and 2 or 3 other stocks are the reason that we are now in a bear market, and it's all just happened in April and May. So this is that 7 or 8 week losing streak that the market's on that has put the indexes into a bear market, whereas we've all been in a bear market for a long time. Okay, I'm going to start with Facebook, and I'm just going to quickly go through these. Facebook got taken out first. Facebook was taken out. It is down 49% off of its highs. So if we look at Apple, their 52-week high was back on January 3rd, the first day of the year. But what I want to look at is from April 4th, Apple is down 23%. So there's your bear market. That's that 23% they took out of the market just over the last 2 months. So really, just prior to the beginning of April, Apple was very near its 52-week high, which is also its all-time high. Okay, Amazon. Again, this is just April and May, down 36%. So Amazon has gotten destroyed in the last 2 months. Netflix, I'm going to ignore the fact that their high was back in November and they got absolutely crushed on their earnings in January. But even leaving all of that behind, just in April and May, Netflix is down 53%. In the last 2 months, again, April and May, down 24%. So that's the FAANG stocks. You'll see, so even though some of them got taken out earlier, like Netflix, which got destroyed at the beginning of the year, they still took another 50% out of it in April and May. And most of these larger stocks, most of these FAANG stocks, they're down 20 to 25% in that 2-month period. And that's what's causing the overall indexes to be in a bear market like they are. A couple other noteworthy, obviously Microsoft, they're the second biggest company in the US market. So in April and May, they're down 20%. So there it is across the board. Tesla is the 5th or 6th biggest company in the US, and you'll see in April and May, they're actually down over 40% in the last 2 months. So this stock has gotten beaten up. Nvidia, which for some people is the new N in FAANG, this is down 39%. These were the safe havens, and in the last 2 months, they've just been taken out. Whereas I'll just show you quickly, here's ExxonMobil. So they just hit their 52-week high. The oil and gas companies are in the exact opposite situation. So we would, not for some stocks like this, we'd be down much worse. Just to take a look at another sector that's done just fine, you can see this is Pfizer. They're up 35% on the year. So again, they are off of their 52-week highs, but they are not at or near their 52-week low in any way. This stock is up nicely 35% in the last last 12 months. Just to go back to ExxonMobil, I mean, in the last year and a half, this stock is up 180%. So this has been obviously one of the best investments in the stock market. This is where money has moved to. Money was in tech, and you can see it's gotten sucked out of that in the last few months. And I'm just going to do one more. JP Morgan, which is the largest financial stock, you'll see this is at a 52-week low. So this is where I'm saying valuations are getting very interesting. Everywhere you look, you see stocks at or near their 52-week low. Some of them are even at 2-year lows or 3-year lows. Some of them are even worse than that. So, you got to do your due diligence. So obviously, again, I always have to remind you, this is not financial advice. I'm not advising you to buy or sell any of the stocks that we just looked at. But what I would say is I would take some time right now to add some stocks to your watch list and reevaluate some of the ones you've been looking at, because this last 8 weeks in a row has been a pounding, and it has left some stocks in what I consider a very desirable place to start dollar cost averaging in. So that's my quick update on the stock market. We'll have to see what happens this week, hoping for a relief rally, but we don't know. There's more pain ahead, most of us believe. So if you made it this far, please remember to subscribe to the channel and smash the like button. Also, thank you so much for watching. Best of luck investing, and we'll see you in the next video.